Hey, what's up, everybody? Welcome to Mortgage Today for July 10th, 2023. And oh, what a day it was. MBS started off the week up 28 basis points in the morning. Sure could use it after the end of last week. Stocks were up 10.5 points. It's characteristically slow summertime Monday morning, and bonds are left to trade without any meaningful market movers. Such conditions often result in random movement at opening closing times for various markets. U.S. equity futures struggled for traction as soft Chinese price data fueled concern about the outlook for a global economy ahead of key U.S. inflation data coming this week. Equities have been back afoot at the start of the second half, amid concerns of economies will buckle under the high rates as central banks keep up the fight against rising prices. U.S. Treasury Secretary Janet Yellen said at the weekend that she wouldn't rule out a U.S. recession, noting inflation remains too high as well. The Fed funds futures are pricing at a 92% chance of a 25 basis point hike at the July meeting. December's futures are pricing in roughly 1 in 3 chance for another 25 basis points before the end of the year. So we'll have to see how those move the market. The upcoming week will have some important inflation data with the CPI and the producer price index both coming out. We will also kick off earnings season with big banks reporting on Friday. Investors will particularly be interested to see whether banks take provisions for commercial real estate portfolios, because that might make them ease up on their lending in general. Interestingly, we don't have that much Fed speak despite the fact that the quiet period starts next week. The market is expecting a 0.3 reading on both core and the headline on the CPI this week. The headline is replacing a 1.2 number from last June, while the core is replacing a 0.6. So this would make the headline figure decline from 4% to 3.1 on a year-over-year basis, and core will fall from 5.3 to 5. Though everybody talks about this, it's just because of the comparison, so it doesn't make life any more affordable. If we wanted to make a case for anything about the first 2 days of the week being interesting, we'd be forced to lie. We could say grandiose things that allude to interest rates making some sort of triumphant stand at the castle walls that separates 7% rates and 4+% treasuries lower, but we're really just waiting to see how Wednesday's CPI shakes out. The MBS closed up 44 basis points. Stocks gained 10.5 points, so pretty much flat all day on that. At the end of the day, we are at 98.78, which is right in these double red lines of the Fibonacci. So it's just trying to figure out what the range is going to be, and I don't think we're really going to know that until the Wednesday data.